I'm waiting for home prices to drop before buying, or I'm waiting for rates to drop before buying. These are common things I hear from would-be home buyers. Brand the Mortgage Man here, and if you are planning to purchase a home but trying to decide between buying now or waiting until 2025, this is the video for you. If you want more videos like this one about mortgages and real estate, make sure to subscribe to my channel and comment below if you have specific questions. I've helped more than 10,000 home buyers over my 20+ year career, putting me in the top 1% of loan originators nationwide. It's with this experience, I'm gonna share my thoughts on whether it makes sense to invest in a home now or if it's better to wait for potential changes in the market. In this video, I'll explain why waiting makes sense for some and not for others, what to consider when making this decision, and I'll even provide a detailed comparison that breaks down the cost of buying versus renting over both a 5 and 10-year window. So why does waiting make sense for some and not for others? Well, for one, not everyone is in a position to buy. There are multiple reasons why someone might not be in a position to buy. Maybe they don't have the employment history necessary. Maybe their income's not high enough to qualify for a mortgage. Maybe they haven't saved any money to use toward the purchase. Or maybe their credit score needs some work before they can qualify, right? Not everyone is ready to buy. There may be situations where maybe rates are actually just too high and it's pushing that person's debt to income ratio above the qualifying limits. There are multiple reasons why not everyone is in a position to buy right now. Maybe you're living rent-free, right? Well, if you're trying to compare living rent-free to buying now, clearly the cost of buying is going to be substantially higher than paying nothing, right? So maybe you're saving money and you want to save that money up over time so that you're in a better position to buy when you feel the time is right. These are important things to consider. Other things you want to consider when making the decision to buy is how long do you plan to keep the home once you buy it? Now you may say, well, I haven't even found a home yet. I don't really know. But you're willing to sit down and consider that. Are you buying a home that you plan to keep long term, meaning you never plan to sell that property? Or are you buying a starter home, maybe something you plan to stay in 2 to 5 years? On average, clients that I work with, especially when they're buying their first home, keep that home 4 years or less. Because in most cases, it's a starter home and they want to buy. They don't want to keep renting, and it's allowing them to start that process of home ownership. So how long you plan to keep your home is something that's important to consider. If you're someone that's only planning to keep it maybe a year, maybe move around for work, and you need a place that you're going to live in short term, well, maybe now wouldn't be the right time to buy because you're going to incur all the costs of purchasing the property, and you're not going to have enough time in that home for you to recoup the cost when it comes time to sell. Even if the home appreciates in value, meaning goes up in value, but call it 5% over the 1 year you keep the property, well, you're still going to have to pay realtors when you sell, and you're still going to have additional closing costs. So let's just say that your closing costs are 7% between the realtor commissions and others. You're going to lose money in that scenario. So how long you plan to keep the home is extremely important. Are you going to be comfortable with the monthly payments at today's interest rates? Right? People focus on the rates being high, but what you really need to think about is the payment that comes along with those rates. Because you're not making a payment every month to the lender for a percentage, you're making a payment for a dollar amount. So you need to be comfortable with whatever the monthly payment in dollars would be on a property that you're interested in. And of course, you don't want to just settle for any home, right? Just because the payment fits within your price point doesn't mean you have to buy that property. However, you do want to focus on the monthly payments and make sure you're comfortable with where those would be at today's rates. Now, you also want to consider some of the financial benefits of owning a home versus renting, right? What are those financial benefits? Well, for one, in just about any market, real estate appreciates in value, meaning it goes up in value. You also have tax benefits to owning real estate versus renting. You can deduct mortgage interest on your tax returns. You can deduct property taxes on your tax returns. If you're someone who takes a standard deduction on your taxes currently, let's just say you're a single individual, and I think the standard deduction is about $14,000 for 2024 for a single individual. Well, the tax advantage might be that deducting the mortgage interest and property taxes might equal more than what the standard deduction would be on your tax return, allowing you to save money on your income tax when you file. You also want to know that you can refinance the mortgage that you get on your property when rates eventually drop. Now, I'm not going to tell you I know when rates are going to drop because I've heard people say, oh, it's 6 months, it's 12 months, it's 18 months, it's 24 months. Well, That was 18 months ago. Rates haven't dropped. So we know that at some point they will come down. I can't tell you when, but what I will tell you is when they eventually do drop, you could take advantage of the lower rates and refinance your mortgage. A benefit to buying now that you might not consider is that you're locking in that home price today. Because we don't know where home values will be a year from now or 2 years from now when you feel you're ready, or maybe you feel rates are low enough for you to want to go ahead and buy. You're not going to be able to go back and renegotiate the price of the home at that point. So if homes do appreciate, let's call it at 5%, and let's say it's a $400,000 property. That means just based on appreciation alone, we're not talking about home prices just going up because there's a lot of more people in the market. Just appreciation at 5%, you're gonna pay $20,000 more for the same house in a year than you would pay for it today. So a benefit to buying now is you're locking that price in now. And what you wanna think about is that when rates come down, home prices generally go up. And the reason that happens is because there's more demand when rates are lower. The more demand, same amount of supply is going to drive prices up. If any of you remember what happened in 2020, 2021, when rates were at historical lows because of COVID, well, you literally had people lining up outside of homes for open houses. It was like being at Disney World, waiting to just go in and see the home. And they were bidding over the prices for these. They were bidding $100,000 over in some cases. They were waiving every possible contingency of the contract. And if you aren't sure what that even means, watch my video where I explain the real estate contract, what contingencies to look out for and what they are exactly. But they're waiving all those, putting themselves at risk as buyers just to seal the deal on a property. So those are all things you really need to consider. So let's do a detailed comparison. Now, this really won't make sense for someone who's rent-free. As I mentioned, maybe you're living with family, which is perfectly okay. We work with a lot of buyers who currently live with family because it's allowing them to put themselves in a better position financially by saving money every month instead of throwing it out on rent, right? But let's do a detailed comparison between buying a home with a $400,000 mortgage at a 7% interest rate versus renting a similar home for $3,200 per month. Because realistically, a property that's about $400,000 or a little bit more in value would rent for around $3,200 a month. So it's a fair comparison. And what we're going to assume is a 5% annual appreciation rate on the home and a 3% annual rate increase on the rental. So let's see what this looks like over 5 years. So over 5 years, your total mortgage payments would equal $159,673, of which $136,199 is interest and $23,474 is principal. Now, at a 5% appreciation rate, the appreciated home value would be $510,513, meaning that you gained $133,987 in equity. After 5 years, your remaining mortgage balance would be $376,526. Now let's see what that looks like over a 10-year period. Your total mortgage payments in 10 years would equal $319,345, with $262,595 paid in interest and $56,750 paid in principal. Your appreciated home value at a 5% annual appreciation rate would be $651,558, meaning that you've gained $308,308 in equity on your property, and your remaining mortgage balance is $343,250, right? Now let's compare that to renting over those same time periods. Over 5 years, you'd pay $203,871 in rent. And over 10 years, you'd pay $440,213 in rent with nothing to show for it. Just think about that. I talked about having equity in your property after the end of 5 years and 10 years, because what you need to consider is on top of the appreciation in your home's value, meaning it going up year after year after year, a portion of your monthly mortgage payment becomes equity in your property. It's not thrown out like rent every month. Sure, you're paying interest, and that portion just goes toward paying the bank back for allowing you to borrow the money. But a portion of your monthly payment is being moved from your bank account into the equity in your property. So owning a home increases your overall net worth. Any equity in your home that's earned by the home's appreciation, along with that money you've paid toward the principal balance every month, is money in your pocket if and when the time comes for you to sell that home. However, when you pay rent on a home, that money is gone, as I said, with nothing to show for it in the end. So I truly believe that if you're in a position and comfortable with the idea of owning a home, you should own a home now. If you find this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages, and make sure to leave a comment below if you have any questions about your own scenario. I reply to 100% of the comments left on my videos.